Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at the technical charts and try to understand what happened in the market during the previous week and also plan for a better trading week for the next Monday onwards, next week starting from August 18th. And lots of things to cover. Let's quickly go into the charts. This is the weekly and the daily Nifty 50 charts that you're seeing left side weekly. Clearly it's within a trend line channel. On the daily also trend line channel. Breakout happened, but it didn't sustain, and 6 weeks of fall we had. Similarly, it's an ascending wedge hit the top of that in the Banknifty weekly, and then it's fallen down. And daily is also in a trend line channel on the Banknifty. So that's a quick. Now, if you look at so basically what happened. This is a 1.1% of bounce up, 269 points in the Nifty, and now that that's 0.62, that's 340 points bounce from the Banknifty. So remember, we had 6 weeks of continuous fall, and the market has paused and attempted to bounce above reverse. It's not confirmed it's a reverse, but it at least did that, and finally it managed to close positive on both indices. Now look at the candlestick patterns. It's solid white edge bullish candle on the weekly on both indices, Nifty as well as Banknifty. So in the case of Banknifty, it's also an inside bar which shows Banknifty is consolidating. It seems to be a very good previous breakout zone from where it has taken a support, and it's a change in priority. We had doubted that in the last week itself, if you remember, and that's exactly what has happened. The bounce up, this change in priority bounce has happened. Now whether it will sustain or not is something else. If it sustains, it can go hit the all-time high 26,000. Right, we'll have to see where the price moves above at least the high of this week's candle high. Then we can continue to see that. So bullish candlesticks is what the pattern is all about. On daily charts, let's see what happens. It is a truncated week with the Independence Day holiday that came in between. So forward 4 days, if you see, solid big blow on Monday, and then some setback or pullback resistance on this Tuesday, and then for the mode up. So that's the same thing that has happened in Banknifty also. But Banknifty, it seems to be more volatile 4 days, if you see big Monday move and then big volatile moves from the Banknifty on Tuesday and Wednesday. And Thursday it managed to climb and recover some of that. So very volatile Banknifty is what is seen, and its attempted recovery is steadily seen on the daily charts. But the Friday's candle seems to be bullish on both indices. That's what the nutshell is all about now. Overall, as I said, after 6 weeks fall, Banknifty posted that it will move up from a support zone with the change in priority zone, which we had talked about. And all the bands, if you see, you can see it's consolidation on the Nifty, and why is that? It's you'll have to see that it's actually this is a weekly. That's weekly Bollinger Bands you're seeing. I wanted to show the daily Bollinger Bands. So daily Bollinger Bands, if you see, we can clearly make out that the Bollinger Bands are expand. Okay, it's kind of consolidating in the Banknifty. Yeah, it's expanding on the Banknifty. So it's a slight contradiction there. The Bollinger Bands on the Banknifty is expanding still. That means it's a more likely look falling down. But the Bollinger Bands, so this, ignore this and this too, because these are weekly views. Weekly is consolidation confirmed, but in the daily, the Bollinger Bands view is this expansion on the Banknifty and sideways consolidation in the case of Nifty, right? So Nifty has actually paused the expansion on the downside. So that way, if you look at this is the story, right? More the bearish price, but so Bollinger Bands. That's a summary of that. Let's move it. Now if you look at the momentum, you see that the momentum is starting to move up, but it's in the sideways, and both in the sideways and attempt to move up. So momentum picked up, whether that pickup will continue to climb above the 60 is, or say 60 is what we'll have to see. That's on the daily, weekly video talk about. On the daily, we see that it has managed to climb into the sideways momentum, and there is a positive divergence also that has worked out there. So in the short term, Nifty and the Banknifty has managed to climb into the sideways momentum of RSI above 40. Short term momentum picked up. Medium term momentum also has picked. So momentum has gone to the sideways now. unlike previous week where short-term momentum was bearish. Now ADX is the trend indicator that we are seeing that remains to be bearish, but there is some strength of the fall has reduced. You can see, so it's still bearish trend, but momentum is turned sideways. That's a nutshell story. So economic momentum will sustain or not is the question. Now India week's volatile index is showing further spike of nearly 3%. You can see that it's on the weekly charts, and it's 12.36. That means, in spite of all the fear, there is no big spike that has happened. Big spike has not come in, although the VIX is increasing. That means the fear is there, fear factor is there, but not too much, because it's still in the volatility regime of the India VIX. Now, if you look at the open interest analysis, there's some positive thing for the bulls on the Friday, because it's a long unwinding build up that has happened on Nifty futures. And that's not because it's mostly bearish, but look at the short covering rally that has happened in the Banknifty, which is positive. Now, August 21 Nifty weekly options data is what is seen here. So the PCR is still bearish, 0.9 and 0.7 on the Banknifty. So huge resistances are built up there, support zones are also there. So based on that, we can derive that the maximum support is at 24,000 and maximum resistance is at 24,000. That's the two places where the play is happening. Now, second highest is support and resistance is at 24,600 and 24,700, where the highest put and call writing is seen. And similarly 56,000, that's the range for 1,000 points range where the highest put and call writing is there. Then 55,500 and 55,500 is where the same as second highest put and call writing. So it's a very narrow range in the case of Banknifty, where the consolidation or the betting has happened on the option writers. That's one way of finding the support resistances for the next week. Still have 4 weeks, so things could change drastically on Monday. But technical charts also is another way of finding the support resistances. Make note of all these levels. So mentioned, the technical reason is mentioned there. It's a gap, it's a rounding number, it's a Fibonacci 50 retracement, it's a previous high, all-time highs, rounding number, PSL, daily exponential moving average, PSL, DEMA, like this. All things mentioned. Make note of this. But how it is derived is what I'm saying. Clearly you can see it's a cup and handle formation that's there. The handle part is in a parallel channel, and obviously first resistance will be the 20 and the 50 exponential moving averages, and this resistance is 24,866, and after that there is a Fibonacci 23 at 25,000 nearby zones. So that's right. Then it goes 25,333 where the resistance is the downside. Similarly, the 100 exponential moving average and the 200 exponential moving average has got the major supports. Right? We have previous lows that comes at previous lows that comes in that zone actually. Right? So 24,000 nearby is going to be very crucial. Similarly, Banknifty, the breach of that would this 100x daily exponential moving average would be the major support, and if you breach that, it goes to the 200 exponential moving average, and then on the upside, the first major resistance will be 50 and the 20 exponential moving averages. So those levels are mentioned here. Right? Resistance, first resistance will be 55,785, 55,859, 56,000. Support will be 55. So 55 and 56,000 is what the immediate resistances are the same, right? So when the Banknifty, you see that it's 24,740, 21st resistance, and then 24,813, 24,867, and then 25,000, and likewise resistance in the downside 24,600 onwards. The supports are there. 24,400 has got the 200 exponential moving average support. 24,374 has got Fibonacci support. 24,337 has got the previous and low support, and there is a gap above the 24,164. 24,000 also rounding number support is there. So that's how it is. Let's move and see how the sectors performs. So actually all the sectors trying to move up for steep close was there, except for the FMCG, which went 4% further down. So all of them, some of them are in bearish zones. Just like the IT sector still remains bearish, and even the 1.3% has not helped increase the momentum, and reality also has got bearish momentum in the short term. Otherwise, it's all sideways. And so overall, if you see, except FMC, all of them has tried to move up slightly, 1% to 3.5% likewise. So recovery attempt can be seen across the sector also, but if you look at sectoral analysis, we see that IT is badly beaten. Otherwise, all the other sectors are maintaining the sideways momentum. That's in a nutshell. Let's move and see the heavyweight stocks that contribute maximum to the index. HDFC Bank, Reliance, and ICICI Bank, and all those, right? ICICI Bank continue to be climbing and maintaining that momentum in the bull zone. So A green close is seen there. That's very positive. That's what is holding the market. Reliance Industries also is in this C, but it attempted to move up and sideways and rising up with literally medium term momentum. ICICI Bank also is in this C, but it's very close to the all-time highs and sideways momentum as it now after having slipped from the bullish zones from the ICICI Bank. So these results are mainly holding the market. All of them are close, managed to close in green, but slightly in this C in the case of Reliance and ICICI Bank. Infosys and TCS also shows in green, but it didn't help to recover the momentum bearishness. It's still in the bear zone. So if you look at both of them, TCS and the Infosys, both of them. Kodak Bank, contrast stock, had a gap down, but immediately sideways momentum. ITC also, FMCG sector is only sector that's down last week, which did not back in the recovery, but ITC maintains a sideways even though it is a red candle that is formed. So that's about the different heavyweight stocks. Now if you move ahead, you can see that the mid cap and the small caps. So the broad markets is what they call it, right? So broad market also is slipping sideways and attempted to move, but yeah, let us see whether it sustains and all. So it's a green close on both mid cap and small cap. Make note of that. So recovery is across the sectors and across the markets. Let's move and see how the institutions participated. So another 10,000 crores of selling. If I was going to be selling for several weeks now, and domestic institutions are equally buying since long. Every time the FI is selling, the domestic institutions are buying. It's another 90,000 crores of buying again. Last week also, DIs are buying heavily. So, but the FI participation is low, it remains to be concerned. That's the reason why the market cannot move. That long term reviews of the FID also has moved up. So, it means betting is almost towards the downside. It's clearly visible. So, FI selling is a concern. Let's move ahead and see how the global markets, currencies, commodities, and all gold, crude oil, all that, how is, and also the US markets, how is it doing. We'll see that. Now, let's start with the dollar index, just further move down 0.5%. So, dollar weakening is good for an emerging market like ours. USD is slightly flattish up, we can say. It remains weak at 87.49. It's not good, right? But dollar is falling down is positive. When crude oil is down 0.35%, which is also good. You'll see that the charts. Crude oil, as long as maintains below 70, is very nice for very important country like ours. And gold, look at that, it's not ready to fall down. But last week it had a big red candle that is seen. It's a 2% downward candle, and the momentum was slipped into the sideways slightly. So, but no, gold is not ready to fall down that I see. So gold falling down means that it's not a threat to equity market if it falls down and corrects a little bit, because it had a tremendous value of more than 100% in the last 2 years. So now if you look at the US markets, you can see Dow Jones green there. So slip happened a few weeks back, but it is recovering now again back to all-time highs. Dow Jones, Nasdaq, and S&P 500 are all green and near all-time highs in bullish momentum. So US market is a mother market, so our market is doing good, is always good. Now that's about the analysis. Let's move ahead and see the stock picks, no actionables. It's all straight recommendation. Make note of that. You know, Minta seems to be an auto ancillary. Seems to be a expanding wedge there. And it is a flat pattern breakout potentially. When a RiskReward can come in, good volumes, good momentum, good trend. Apollo Hospitals within the trend line channel, a lot of space to move, solid bullish recovery. Seems to be a breakout of a flag or a parallel channel. Volumes are good, trend is good, momentum is good. Trend is based on the ADX and momentum is based on the RSI. So that's two long calls. One, Minda and Apollo Hospitals. Another actionable is on the FNA weekly on the Batman usual strategies. It's on the Nifty. It's just 80% probability and very good range of nearly 24,000 to 25,000. That's a range that we found for the maximum resistance support is that. So the Batman strategy is basically inside the hedges and outside OTM selling. Not completely hedged because the two wings are not there on the put side and call side that could protect us. But if you do that, then you don't get any profit. No, the return of investment will be very less. So you have to take that risk of having slightly non-defined risk. But the moment it breaches the neckline, it's a very wide range. That means if it is breaching the 24,000, get out. If it is breaching the 25,000, get out. Right? That's a strategy. That's a Batman weekly, not fully hedged, but reasonably good range and probability of profit is what this weekly strategy. So try it out. It's not recommendations. These are just for learning purpose. Let's try to wrap it up. The market seems to have been 6 consecutive weeks of fall, and last week it had attempted to recover and bounce up and close positive. on both indices. The momentum has picked up, but the trend remains negative. And the FIS continue to sell. Remember, we had a tremendous landing of nearly 70% with hardly 18% of correction in Nifty and hardly 13% correction of the Banknifty, less than that. So, yeah, interim corrections have been happening. If we were in the path of a 6 week of correction, and would that sustain, or will it extend further towards more corrections and all? We'll have to see next week only. There's no clues as of now. It attempted to bounce result that we know. It does not confirm that it can sustain that or not. We have to keep close by. So the best way to understand and take a view would be to put the different parameters against the bulls and the bears bucket. So in the bulls bucket we have India is not spiking up too much despite all the noise on the tariffs that's going on. It's positive. Probably the fear is not there, but it can spike up just suddenly. Keep that in mind. So as long as VIX is in the low volatility regime, things are not bad. Market has picked up and market has recovered from their zones in the short term to the side with zones. It's good, positive. Those markets are green, very good. Is less, and these are all positive factors. Now, if you put layer factors, there are a lot of troubles there. There's trading below the 20 express moving average, having big resistance up there, or options of PCR is red, and or futures with Nifty is showing bearish, not like Banknifty. That's why it's calling to sell, and both the banks are showing downside expansion. It's bearish bias even on the Nifty. Major indices slipped sideways and hanging on there. And sectoral indices temporary recover, but some of them are in the bearish zones. Right? These are all the red flags that could potentially indicate that there could be further correction, but all this depends on the US tariffs. All this correction is due to the US tariffs. That Trump is not giving much clue as to if any negotiations could happen or not. If it happens, then certainly then the market volatility continues to be there. So we'll be cautious about this volatility factor. And therefore the market view is mild bullish, right? Very mild bullish, cautious bullish, I would say. So always keep in mind technical analysis. Whatever you do cannot hold on if there is a big backswing kind of events that happens. But still, technical analysis is the only way to understand where the support zones are there, where the resistance zones are there. Right? There's no way of finding that by understanding the company's economics or company's fundamentals. That will give any clue for short-term bets. So the range for the next week is 24,000-25,000 and 54,000-56,000 on the Banknifty. As long as 26,000 and 57,000 is not conquered, we are still consolidating or correcting. Keep that in mind. So always hedge your positions in the portfolio. Your capital is all that you have got. Risk management is all that trading is all about. Always hedge, and you can also use hedging strategies to make some rental income using your investments. Check out that on the playlist for more details on videos like that. That's all I have. If you like the content, you can subscribe, put in feedback, and share it with us. I'm also active on X, where I regularly post technical analysis and all that. You can subscribe to that as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.